Alexandra Whittier-Sharon. I am the CEO and President of Empress Royalty. We offer investors a strategic approach to investing in gold and silver through the royalty and streaming creation model. We invest in companies, helping them either get into production or expand their production capacity. And I'm happy to announce that we are now cash flow positive and just recently announced we had over $8 million in revenue for 2024.
Is this what you'd say? I told you so.
It is.
I'm waiting for this all day. Well done on the numbers, first of all.
Thank you.
Right. And so where's that come from?
Yeah, so we just put the numbers out last week. Very excited. We did $3.5 million in 2023. We were forecasting $8 million, and we've actually delivered $8 million in revenue. That's coming from our 4 key assets in the portfolio. We've got a silver stream in Mexico, gold stream in Peru, a gold royalty in Mozambique, and a gold royalty in South Africa.
Right. Obviously, a great environment for producers and to be throwing off cash because they've increased margins, etc. What's it mean for them in this environment, and what's that do for you?
Yeah, I mean, for us right now, it's watching these companies. Some of them were producers that are ramping up. We had the development assets now getting in production. And, even taking a step further back, when I first started talking with you, we had this concept of what we wanted to do, which was provide the streaming finance solution to the junior side of the market. And we've now delivered on that. We've got the 4 key assets and the revenue starting to come in. And next year, we're expecting to double that just with the existing 4 investments.
Okay. So that's what they're based on their guidance.
Based upon their guidance and where they're projecting to go, and as they fully ramp up, like Talahueto, our silver stream in Mexico.
Yeah, it was the Luca guys. They're doing really well at the moment.
They're doing really well, yeah. With Dan Barnholden going in there, and in August is the new CEO. They're getting we got all of that resolved. We're moving forward with them, and they're doing some exploration work. But that silver is starting to come in a significant way. It represents probably about 35% of our revenue. Silver.
Okay.
Yeah.
Okay. And actually, give me a highlight on the rest of the other 3 projects, if you don't mind.
Yeah. So we've got the Talahueto one, as I mentioned. We invested $5 million. We've got close to 90% of that, our initial investment, back already. Then we have the Sierra Antipite stream, which is the one in Peru. We invested $10 million. About half of that investment's come back in. We have the Manica gold royalty in Mozambique. I actually just had boots on the ground before Indaba checking that project out. That was one that was development stage. They got in production. It had a 3-year mine life. They've now picked up additional concessions, so we expect that to run a lot longer. The $3 million, we've got over $4.2 million accumulate back from that investment.
Right.
And then we just recently did recently in March last year, I guess, God, it's almost a year ago now, Galaxy with Golconda, and they're just getting all the equipment around and getting going. So those are our 4 key assets that have generated that $8 million this year.
Right, so you've shown you can do it, and you've shown the money's coming back.
Yes.
So I guess shoring up your own balance sheet is kind of an important part of this to be able to kind of, go again. You got to go again, right?
Absolutely. I mean, we're all large shoulders in this. We looked at over 10 deals last year for various reasons. A lot of it was technical. They didn't stack up, so we didn't advance them. So we have been very patiently looking to deploy our capital.
Yeah.
We did announce we're in advanced discussions with one in the U.S. right now, and if that everything falls into line, it will come into the portfolio. Again, it's not a guarantee, but we're very excited about that.
Same profile, precious metals.
Absolutely.
It's a streaming deal.
This one happens to be in the U.S.
Yeah.
A lot of the other ones we're looking at right now in the pipeline are in Africa and South America, but it is very much, finding the opportunities in that $5 to $10 million range, public and private companies. They're either in production, they're restarts, they're close to production. And where we're getting to now, because we're cash flow positive, we can reinvest some of the cash we have. And we also still have that $20 million available from Nebari. So we can actually keep executing on our strategy without diluting shareholders.
Right. I want to talk about a little bit about the market dynamics. Macro for sure. I'd love you to comment on this one, David, but about how you go about selecting companies. Because what I've seen in the last 18 months or so is companies having to dramatically change the way they access capital.
Yeah.
Because the cost of that capital has become a little bit prohibitive. So alternative financing is obviously, on everyone's lips. But also the way that they go about getting into production, the speed at which they get into production. So rather than sort of building out this huge, very efficient projects, they're saying we need a kind of a quicker to revenue model, smaller starter packs. Are you starting to see some of those types of conversations happening?
We're having a lot of those conversations
Right.
right now. And I mean, if you want to elaborate more, but it's also a lot of opportunities where they are, let's get this in production. Let's get some cash flow coming in.
Right.
How do we do that without diluting our shareholders now? Let's just get it. We're taking advantage of the commodity prices. And then they've got bigger expansion plans. And that's a lot of the companies that we're really evaluating.
Yeah, I think, as you know, equity markets are still tough.
Well, that's the problem they're trying to solve for, right? Which is an opportunity for guys like you.
Exactly. Equity markets are tough. Debt markets take time. And also you've got to pay them back. And that puts the stress upon the business. Obviously, our model is a long-term payback. Although, as you heard from Alex, the way we structure our deals, we do get our money back quickly. But in reality, it is a long payback period, streaming. We're looking for life of mine. We're looking for long-term returns.
Okay.
So we have what I believe and the business model of our business is a great solution. Equity markets are tough, undervalued. Getting a loan for a small amount of money is just as much hassle as a lot of money. So a lot of institutions don't do that, and we fit in that middle. And that's why we've got that perfect solution.
Right. And I think the other thing here is because I think bigger royalty companies are guilty of this. They could almost afford to take a few risks because everything is valued the same. The same multiples are applied. When you're kind of a bit smaller and a bit more nimble, you're going to need to make darn sure this thing is capable of paying you back via the streaming model is that you
longevity
take
of
the metal and then the longevity component of it. So this, and I guess you said it, you looked at 10 projects last year and said no to all of them. You are being very selective and careful with your capital.
Yeah.
We are. And take Luca, for example, the Taueto stream. I'm the chairman of the board. And I went on there to protect not only obviously the shareholder value for Luca and their shareholders, but also from the Empress side as well. It's a big investment from us, important investment, and it has taken time. I mean, it's now in, full ramp-up mode. And, you look at the growth profile for Empress, it's really driven by Luca and what's happening at Taueto this year.
For 2025, yeah.
And the silver price, I mean, you mentioned, it's $32, whatever it is now. We've set this company up to be precious metals. We believe in gold. We believe it's going to 3,000. We believe in silver. We believe that's going to $40. So a huge increase from where we're projecting our 15 million range this year will be way above that.
Yeah,
where
we're looking $2,530. So yeah, we're conservative.
We're looking very positive for this year based on where we are.
Right. Talk about the kind of jurisdictional component. You have gone traditionally, and you know Africa. Obviously now Peru, Mexico is there, and potentially the States and so forth. Are you looking to kind of diversify that risk profile, like getting a more blended approach to it? Will you get rewarded for going to more, I guess, conventionally safe countries now? How do you feel about that?
Of course. If you look at people, they go, okay, we want the Western world, first world countries. But we're not that type of country and company, I should say, so I take exact. So we know these, Mozambique, for example. Where's Mozambique? We invested in the first modern gold mine there. They've paid us back already.
Yeah.
We've got investment back. We're now all in the profit zone. Why? Because we knew the operators behind it. We knew the country. We knew how to structure the transaction to make sure we're safely investing in that country.
Be able to get our
So we made a huge investment there as an initial company. We now got the money back. We're getting great returns. So it's all free money in effect now.
Yeah.
And that's by understanding the markets, understanding how you invest and how you structure that transaction. And that's what we are. That's what we know. So from that perspective, we will still look at jurisdictions which are unusual, let's call it that, compared to our competitors, the North America, Australia type models.
Right.
And we're not going to shy away from that.
No, it's not. And it's also leveraging off our experience and our expertise within the management and board of being able to go into these countries. So if we can get the right framework, be able to get the gold and silver out, be able to get security of the assets, because all of our assets we've got security over. Luca was the only one where we weren't first ranking, and that's why everyone on the board over there. So it's very much trying to create these structured finance solutions for the companies. So that
I think also investors need to understand that the way we structure deals is quite unique. Firstly, streaming and royalty deals, you get paid from revenue. So you're the first person who gets paid money. So as soon as that gold bar is sold, you get your money from the refinery. So we're super, super senior, as it's called in the credit world. So it doesn't matter what your operating costs are, whatever costs are, we get our money out first. So we're the first check that gets cut. So that's fantastic from our revenue point of view. And what happens afterwards, obviously, hopefully they're profitable, etc.
Yeah.
We get our first
to
cut.
survive.
And then we obviously, thank you for that, yes. And we also, and we also then are, as our asset structure is, we're secured. So we have that added protection. If there is any issues, then we are secured on the asset. So we do have a way to recover our money back, worst case.
Okay, you're starting to talk about the things which you think people should understand are important. They're kind of fundamentals of the business model. But I think what would be useful if you can sort of explain to people what else about your company is important to understand. It's important to know, because it's like, you guys get blanketed all under royalty and streaming. It's all the same thing, right? You're all the same. It's the same model, right? And you're starting to describe something which says, well, actually, there's some nuance to this. And when you're a so smaller company, it's hard to kind of stand out from the pack and say, look, we've been successful. You're of a certain size. We've got 4 deals, potentially, well, you do have one other that shall not be named project, and a potential in the US. And it's fine, but I think people want to value scale, raw deal and scale. And you're saying, well, actually, come on, look at the economics here. These are good deals on their own right. Do you think they're right? Do you think you're right? Or do you think it's a little bit of both?
Well, we've always said, and we're fairly clear, we're not going to just make noise for the sake of doing. We can spend the money tomorrow. We can do 10 deals tomorrow.
Yeah.
We can do a press release out every week. We've done this, we've done that. That's not wise. I've been in business too many years, and you want to do sensible deals and make money for people and shareholders and for yourself, etc., etc. So we are wise stewards of money. That's the key thing. So we're not going to play the game of trying to do a deal just to get another 5 cents on the share price. Unfortunately, we're going to do things that create a company that's going to grow. And as you're seeing now with our results, we're getting the revenue, we're driving cash flow. That's going to double again. We've got a double, hopefully on the future. That's really our motto as a business motto, is doubling every year our cash flow and our revenue. So, that takes wise stewardship. And that's a little different. We're not just all about, making the market happy. We're about building a business.
But it's also different in how we approach it. If you look, there's about, 30 or close to 30 public companies in the royalty and streaming space, huge ones down to a lot of the juniors as well. Mm-hmm. People are doing the prospect generating. They get caught up in that. So exploration, early stage, who knows, it will turn into a mine. There's a whole bunch of people who have the passive investments buying existing third-party royalties. Mm-hmm. We're not doing that. We're directly investing into the companies. And now with the financials coming out, it shows we're getting that direct revenue. Yeah. We get monthly reporting. Some cases, if things aren't going according to plan, weekly reporting. We work with them like we did with Luca to get them back on track, to get the revenue coming in from that silver. And we benefited significantly from that as well with the silver price moving. We go to site, we have boots on the ground. We're very involved. We're very active investors in the transactions.
Right. Again, it's a semi-consultancy in a way, but also you want to be close to the numbers and steward your capital. I get that. But given you've done what you've done, I think you were signaling 6 and hit 8. Is that right? Okay.
25% of
right. So
forecasted.
Bit of an uplift there. With people like Nebari or others, is it a case of if you had more money, you could do more? Or are there not enough deals to be able to even worry about that at the moment? What's happening out there?
We set this company up to do sub $25 million. The biggest one we've done to date is $10 million. Mm-hmm. We are definitely seeing ones that are in that $15 to $20 million range, whether we syndicate or co-partner with someone on them. Yeah. I don't think there's a shortage of deals. It's just when you kick through them and you do the due diligence, which ones make sense to advance at the time. And we've been at this for a while now. Yeah. So a lot of those ones we talked to before that were too early stage are now coming to the point. And as you raised it also earlier, people are taking a different approach developing these mines. They're starting in a smaller scale to get into production, to get some cash flow coming in. So there's a lot of opportunity, and it's choosing for us, as well as we constantly look at the diversity of the portfolio. We don't necessarily want too much country risk. We've kind of got our 4. How do we build on that? Yeah. Commodity basis, we really like silver. We're looking at gold and silver opportunities. So it's kind of why
I started with that question, because when you used to say, there's no shortage of deals, but they're not the right ones, right? So, there's deals, but there's your deals,
Correct.
your portfolio deals, right?
But that's purely how we kind of manage. We are serious about managing our shareholders' money. There's an easy way to spend money. You can do lots of deals, but then you're going to trip up later.
Yeah.
And we're big shareholders as well.
I'm coming to the point. I'm paying you a compliment here because I think possibly you timed this right, given the way the market's going, in the sense that there has not been the type of deal that you wanted that suits your business plan. But my point out of the gate, which was the way that companies are now having to search the market for the right type of money for a new model, certainly for the North American guys and gals, where they're saying, it's always been always drilled to the edge of the but now it's, I see, let's get this darn thing into production, get some cash flow, anti-dilutory. The retail guys have left us. The markets are not deploying capital. I've had two companies come in this week and say, we just got 60% of our money from Australia. Like, as a Canadian company, like, what the heck just happened? So is that kind of market condition, does it suit you best?
Yeah.
Yes.
Yeah, I mean, absolutely. Right now, we're seeing a lot of opportunities.
You can say no. He looks like he
No.
wants to say no.
We don't always agree.
I'm just caveating. They've got to be the right opportunity.
Oh, for sure.
There's lots of opportunities.
The rules still apply.
But the rules still apply. I mean, and I think that's important for our shareholders to understand. And we care. We care about getting a good return. We care about every deal. We do a lot of. I mean, you could do 100. We spend as much time and effort on our little deals compared to $100 million deal that I see some of our competitors.
I get it, but it's a challenge for you. And again, you need to inspire me with confidence on this one. It's like, I make money when your stock goes up, when your share price goes up, right? So being careful arbiter is great, but I don't want to hear that we're going to be so careful that we're going to stagnate. I want to know what's your optionality around growth, right? Where do we go?
And as good business stewards, which I keep repeating, but it's important for me to reassure our investor base we're now $8 million of revenue. We're cash flow positive. Our treasury is building up. We have now got a stable base to which we can now launch into that development phase. You could say 2 years ago, when we've not got the cash flow, we'd have to raise equity money, we're kind of risking the business a little bit by growing too quickly. We're past that now. We're at the point where we've got our own funds to invest. We're not going to go bankrupt. We're not going to have to raise money just to stay alive, which sadly young companies need to do. And that's part of how we manage our business. We drove this business to make money as quickly as possible to get to that tipping point where from now on, we can grow the business with our own funds and obviously the use of debt facilities.
You think we're at that tipping point now?
Absolutely.
Right.
This is
it now.
This is, where
you wanted to get to, give you that freedom. Okay.
So
but coming back to the Nebari thing, it's like I get the facilities there, which is fantastic. Do you think that having earned the right to get to this tipping point, will that give you access to more capital if and when you feel it's right? Well, how it is, the market's there.
Well, 8 million.
Okay.
8 million proven.
Yeah. Okay.
Audited, done. Fantastic. We know, because obviously we've got the Luca asset, which is now fully ramped up, and that didn't really show last year, so that's now there. And you can obviously, it's a public company, so you can see what happens from their results. That means we're going to be way, way above. We're going to be more like the $50 million range is our estimate, depending on market conditions, obviously. Well, do you think we can get a bank facility of a substantial size when we're doing that kind of money on a regular basis?
We're focused on doing the next deal, bringing it in, letting the next financials come out as well. We've got the $8 million revenue now. We've kept our G&A tight. It was flatlined at $2 million. We don't really need to expand it much past that. We're able to operate very nimbly, and it's about bringing deals in. And that really is our focus. And we're changing up our business development strategy. We're bringing in people in Africa, someone who's going to be able to represent us there, South America, North America. So we're taking more of a regional approach, supporting the network opportunities we see, but directly dealing with the companies, public and private. So this is the year we really want to focus on that and bring new ones on to show that there is that growth from it. I think also with it being pure gold and silver, I think we should see some lift in that. Absolutely. I mean, we're not mixing in other commodities in revenue numbers. It is pure gold and silver.
It sounds like one of those NCPs, NPR asked a football player, He's about to win the league. Are you going to win the league this year? And we will take one game at a time.
Correct. but that's
That's what I'm hearing. But we will win the league.
Yeah. Hey.
All right.
Okay. But I just maybe finish off here and just say 2025 for you. What would a win look like at the end of the year?
I would like to see our revenue increase from where it's now, and I would like to bring at least, bring some new investments into the portfolio. You're probably gonna be much more animated than me than saying that, but yeah, it's growing the company.
When do you issue guidance on what are your targets for this year?
We're saying between about $15-16 million US
Okay.
revenue is where we're loosely forecasting, expecting, just based upon the current portfolio.
Yeah.
But we'll put out,
Yeah, so we're going double.
Nice. It's hard to ignore you at that point, really.
We've proven it. We're going to double
doubled over
again.
last year.
Yeah.
Getting ready? Good to see you.
Great to see you.
Good to
Thank
see
you, Matt.
you.
Matthew, always a pleasure.
David.